Tomorrow's going to be a big day out there, and we're going to talk about what stocks are likely going to do tomorrow. Look at Amazon after the bell, a big, nasty, knee-jerk reaction on the way down, and the buyers are coming back in, trying to bid it back up. Now, we come over and we look at the earnings out here after the bell. Amazon has earnings. That's why we see such a big movement out there. And over the past 2 weeks or so, we've seen a lot of companies come out with earnings, get a nasty reaction to earnings. If you guys remember earlier this week, we had PayPal come out with earnings. Yikes, a nasty gap lower. We had Qualcomm come out with earnings. We had a gap lower in Qualcomm as well, along with several other stocks. Now, we come over and look at the fear and greed index. Right now, we're sitting at 41. And again, we are still stuck in fear. We're having a very hard time pushing out of this area. And yes, I know February is the second worst month in history for the stock market. Now, we come over and look at how the indices fared across the board. The Dow was down 125 points. The NASDAQ was up 99 points. S&P 500 up 22 points. And the Russell 2000 down 0.73. Now, when we look at advancing issues versus declining, this was pretty darn even. We had 49% of issues declining on the day. Then as we come over, we look at the sectors across the board, energy and healthcare by far were the laggards out there. And speaking of healthcare, we can see White House preparing to order to cut thousands of federal health workers is what the Wall Street Journal reports. And let's not forget, January jobs report expected to show hiring slowed, unemployment rate held steady to start off 2025. And if you're saying, Mike, what in the world are you talking about? Well, tomorrow is going to be one of the biggest news events of the month. That is, we get the average hourly earnings, the non-farm employment change, and we get the unemployment rate all hitting the tape tomorrow at 8:30 before the market opens. Then at 10 a.m., we have preliminary consumer sentiment, followed by preliminary inflation expectations. So hopefully you guys will join me tomorrow on the live stream as we try to navigate these turbulent markets. If you want to make sure you don't miss the next time I go live, make sure you're subscribed. You have the bell notifications turned on for all. And tomorrow we're going to be giving away a 50K take profit account. Now, as we come over and look at the non-farm employment change, we can see they're expected 169,000 new jobs to be added. The previous reading was 256. So how are stocks likely going to react? If we look right here, much weaker data, lower than 105,000 jobs being added, we can see that stocks will probably go up. Dollar and yields would sink lower. We look at just a weaker reading, somewhere between 169 and 105, then we would likely see stocks up. Dollar down, yields also down just a bit. And if we see it in line, right around 170,000 jobs, see stocks basically go sideways, chop around a little bit. Same thing with the dollar and yields. Then if we get a much stronger reading, 171,000 to 240K jobs, we'd expect stocks to go a little bit lower. Dollar and yields go a little bit higher, then much stronger, higher than 240,000 jobs being added. You would think that would be good for the market. However, we could see stocks drifting. We could actually see stocks cratering lower because the dollar and yields would likely be on the move up higher. Now, when we come over and look at the dollar index real quick, we see the dollar index is really threatening this lower swing point over here. And if that level gives way, we're probably going to see the dollar fall substantially from that price point. We also come over and look at the 10-year yield, almost reaching that ABC pattern completion to the downside. I need a little bit of help with this in the comment section down below. Trump's focus on 10-year treasury yield to cut borrowing costs raises curiosity and problems. And what it goes on to say is Trump no longer is going to go ahead and pressure Jay Powell to go ahead and cut interest rates. Instead, Trump wants to go ahead and impose the government's will on the market to get the 10-year lower. Let me know in the comment section down below. Do you guys think this is actually a viable option that will actually work out here? Now, when we look at the volatility index today, down another 2.15%. When we look out here on the 5-minute chart, notice for the majority of the day, going lower, lower, lower. Then we got a little bit of a lift back up, only to close out the session very near the lows of the session. So we come over and look at gold. We see yesterday gold making new all-time highs. Today, a little bit of a hammer, aka maybe a hangman-ish type of candle up here at these highs. And let's not forget, we have that gap from contract rollover. Will we see gold starting to go lower, potentially coming down, filling the gap? Or will the current administration's efforts to actually get the 10-year lower also cause the dollar to go lower and gold to continue to rally even higher from here? Now, we come over and look at the diamonds real quick. The Dow Jones, notice we've had this run up, a little bit of a consolidation up here on the all-time highs, not that far away. We look at the Russell 2000, the small caps, being able to regain that anchored VWAP, getting back above it. However, closing roughly in the middle of the range today. Then we look at the SPY, the SPY. Notice, what do we have? High, lower high, slightly lower high, if indeed we start to turn here. And we have what could be a hanging man type of candle. After hours, we do see the SPY down slightly, but today, the SPY was up 0.35%. And then we come over and compare that to the RSP, equal weight S&P 500. What do we notice? RSP was actually lower for the day, down 0.15. Right now, Take Profit traders having a 50% sale off all their valuation accounts, and no longer is there a daily loss limit. Now, to take advantage of this offer, use the link in the description box down below and use code EPITOME at checkout. Now, jumping back over and looking at the SPY real quick, on the 4-hour chart, MACD indicator is trying to cross to the upside. Then we dive down, start looking at the 30-minute chart. Notice this morning, we gapped up. We were able to come down late this afternoon, fill in the gap. But for all intents and purposes, I'm going to classify today's profile as a D as in dog. Yes, I know we have a little bit of a tail on the bottom of it, but for all intents and purposes, we basically had nothing more than a consolidated day out here. And notice the MACD indicator already started to cross to the downside. Then as we ripped right back up towards the close, notice, look at the MACD divergence starting to set up. Is that setting up for stocks to potentially fall tomorrow? Because what I do want to warn you guys about with a D-shaped profile, whichever way we first break, watch out. That could be nothing more than a trap to get the markets ready to move the other way. So tomorrow morning when the news comes out, if we're going substantially lower, we want to be on high alert. Could that be nothing more than a trap as the markets basically push lower and then try to go ahead and rip right back up here towards all-time highs? We come over real quick and take a look at the futures markets on the 4-hour chart. Look right up here. We've had that push up, a lot of consolidation, and we still have that ABC target up here about 61.20 and a half. We did not make it out there today. And as we start looking, notice we do have this minus development area within the profile, which we just barely missed wicking down here towards today. Then as we look at the daily profiles, one of the areas we talked about today extensively on the live stream was looking to see, can the S&P make it all the way down here towards that point of control at 6,071 and a quarter? And what do we get? A little after the stream, the market finally broke down towards that area, then boom, right back up. Now, as we also look lower, keep in mind, we have that minus development area from the prior day, which could come into play out here tomorrow, especially with the economic news that we have coming out. 6,067 down here to about 6,063. So let's see, tomorrow, do we come down here, dip down to it, and then potentially rally up higher? If we do not, if we have a positive reaction to the news tomorrow, watch for this ABC target to potentially get hit, and then maybe even watch to see, can we continue to rally and maybe start pushing our way even closer towards all-time highs in the market. Now, as we come over and look at the QQQs real quick, notice a nice push that we've had out here on the daily chart. 1, 2, 3, 4 consecutive up candles in a row. Will tomorrow be number 5? Can we get above these recent highs in the market? Then on the 4-hour chart, MACD indicator is crossed to the upside. And on the 4-hour chart, we've had a series of 1, 2, 3, 4, 5, 6, 7, 8 candles up in a row. Only one of those 8 candles was down, and it was a slight, a itty bitty little down candle at that. Now on the 30-minute chart, notice we have a D as in dog shaped profile. We closed near the upper end of the range, and then after hours, we're almost right back into value area high. And we're going to see, do we see a little bit of selling come in today, or are they going to go ahead and try to juice it up in tomorrow, trying to front run that NFP data coming out? Tomorrow, if we do start trading back below value area high, watch out for the point of control to be tested. However, I got a sneaky suspicion we're going to be on a path up towards all-time highs in the market. Then we come over and look at the futures markets real quick. Notice right here, notice today, as we came running up towards the end of the day, we still missed that ABC pattern completion. And that comes in at about 21,895. Notice here's where that pattern is actually drawn from. Start down here at the low, pull it up here for the first swing up, then down here to the swing down, and then all the way back up for that pattern to complete. And notice we are not that far away. Then as we come over and start looking at the daily profiles real quick, notice we do have an untested point of control up here at about 21,905 and 3/4. Today, we were not able to come down towards that P point. And this is one of the areas I was watching today. And we have that D as in dog shaped profile. So if we start breaking up even tonight or tomorrow after the news, I want to be suspect. Could that be nothing more than a trap to send the markets lower? Ideally, I'd like to see the market push below the lows first before we go ahead and try to bid it up, if indeed this market's going to go ahead and start to rip higher. Now, if we go ahead and we look at this, let's say that we start breaking down below value area low or even the lower range from today, then I do want to look at this minus development area. That's going to come in anywhere from about 21,687 down to about 21,633. Now, as we start breaking through that area, if indeed we do make it down there, one of the things I would want to focus on is I would want to pull a Fibonacci retracement from the swing low all the way up here to the high. Now, if we go higher tonight, then we just have to adjust that Fibonacci ratio up. But right now, notice the 38% retracement is all the way down here at about 21,523. And the 50% level is substantially lower, all the way down here about 21,411. So we'll see, can we start to set a little retracement up? And that could set up another ABC pattern on the way up. Keep in mind, if we do break that 21,905.75 point in control, we have another one up here at 22,007.25. Now, if you want to see why I think take profit is one of the easiest prop firms to pass, make sure to watch this video right here.